There has been a massive economic bluff going on for years now. And unfortunately, as the economy has gotten worse and worse, the bluffing has gotten more aggressive and more pronounced and more extreme and dishonest. And you say, well, wait a minute, Peter, I don't think the economy is weak because I've heard that the economy is so strong. That's kind of the point of what this video is all about. I'm going to show you that the really sad part of all of this economic bluff is that you and I were the ones being bluffed the whole time, and we're even being bluffed right now. We're going to go through it, and I think that you are going to agree with some of the things I'm saying here, maybe not all of them, but a few of them you know to be absolutely accurate. But right now what's happening is there's a government trying to pretend that they have better cards than they have, and they're telling you that they have good cards. But are they bluffing? Absolutely, and I'll show you exactly how and why, and then it's going to help change or direct the way you think about investing. Not everything is as it seems, and it's definitely not anywhere close to what you're being told it is. You're being positioned or you're being shown whatever optics they want to give you. But is the economy strong? I look at things differently. I say that it's incredibly weak, and I explain to you why I say that. Now, it's up to you to take in the information and decide. Listen to people who don't agree with me, take in that information too, and you make your own decisions. People come to me, and I always laugh, and they say, you say gold prices are going to go higher, but this guy says gold prices are going to go lower. I'm like, yeah, it's the internet. There's 100,000 people saying the opposite of what anybody else is saying, so it's irrelevant. You are the only common denominator. Just like with doctors, you got 12 different doctors on the go telling you different things. You need to be the one to study and learn what you have to do for your health to be best. Same with what you have to do for your investments in your own personal portfolio to do best. And why do we want this? Because if you have more finances, more dollars, you have more power, which will allow you to do things such as help out the people you care about when they suddenly and unexpectedly need a lot of your help. What could be a better feeling than being in the right place at the right time when something happens that then you can react to it because you have the means to react? That's what it's about. It's never ever been about money for me, and it shouldn't be about money for you either. Money is just a means to an end or a way of keeping score as a business person. Money for money's sake, is it the root of all evil? No, it's the root of all production. It's the root of all trade. It's the root of all ease of life, but it is not something to be desired or loved. It's something to be used as a tool in this absolutely insane world right now. Please click like on this video because it helps us spread the message. We are telling you the reality of the economy. We're giving you our interpretation of it, and you decide what to do with it. What could be better? You were told to go to school, get a diploma, and you have a career. And sometimes, yeah, but a lot of times nowadays, everybody seems to have 6 figures of student loan debt and no job prospects. And even the job that they might get that they learned about isn't going to pay that well. But there's so many people who listened to the bluff and they went and they got a degree in something that's not all that useful, but now they have all the debt. You do better if you just come out of high school, go into the trades, be an electrician, be a plumber. There's a ton of jobs, a ton of money right now. There's no tradesmen anymore or tradeswomen. Think of it this way. In poker, when somebody's bluffing you, they're trying to pretend that they have better cards than they have or trying to pretend they have worse cards than they have. But there's also something better, a level beyond that. When you recognize someone's bluffing and you know they're bluffing, then you have the advantage back in your court. You've been told that inflation is going to do A or B, it's going to rise, it's going to fall, and all the while, that distracted everybody from what's really been consistently going on this entire time, which has been phantom inflation. You're getting less in the packages, you're getting the same packages, same size with fewer contents. The types of ingredients that they're using are changing. They are cutting costs in all these ways to your detriment, and it's not really clearly being seen. You've been told that bonds are safe. You're a risk-intolerant investor, maybe lean more into bonds. It used to be that way. Now you're seeing stocks and bonds falling together at the same time, which is one of the worst signals in the stock market, almost as bad as a failed rally. And the bonds haven't been a safe haven that they've normally been. There is risk there. People are realizing that now. So if you want no risk, you should invest in money. And you know what I'm going to say. Money is gold. Gold is money. Precious metals are money. There's even a time where silver was used as money before gold was, and silver cost more than gold. You've always been told, the big one, you know I'm going to get to this, so I'll just get to it right now. You've been told the economy is so strong because the politicians at the time needed you to think, or the optics needed to be, that we had the strongest economy in the world. We're living off debt. Right there, that immediately just wipes out that argument. I don't even want to get into the deeper stuff because there's balance of trade, budget shortfalls, monetary creation. Who's got time to talk about all this? What you need to know is that they tell you the economy is strong because there's a hidden vested interest that they need you to believe it's strong so that you'll take actions in the way they want you to take, such as, for example, elect Joe Biden, whatever. There's always the people in charge manipulating what you see to the best light for them, and whether or not it's true has got nothing to do with it. And by understanding the reality, which about 3% of people, I don't know, it's a guess, 3% of people actually understand, compared to the 97% that don't see the reality, and they think that if somebody is a high-level politician on the news, cameras in their face, and they're saying something, that it's to be believed or that it's true. Weapons of mass destruction, they tell you what they need you to hear so they can have you in line for you to back whatever policy or direction they want to go. And sometimes it's in your best interest. Sometimes it's not. You've heard and been told that we could just print our way out of anything. We have the printing press. We can never default. We will default. We have defaulted before, and we'll continue to default on the federal level, the statewide, municipal, the individual corporation level. There's going to be a lot of defaults. But yes, we don't have to default. We could just print as much money as we need. Isn't that what we're already doing? I've shown you some of these graphs that it doesn't even matter what the numbers are. They're so brutal. Like, you can clearly see that this is not sustainable. Show this to an 8-year-old kid and say, do you think this can keep on going on like this? What do you think is going to be the ramifications? You'd be amazed the wisdom that comes out of these little... If we print more money, especially if we print the amount of money that we need to print, and especially if we print even more than that because of quantitative easing, or we're trying to revive an economy, that's going to absolutely kill the value of the dollar because there's so many more of them, and it's going to drive the prices of gold up through the roof. You've been told that stocks typically return 6 to 8% per year over average. Yeah, sure. But then people will take that to mean, okay, they always return about 6 to 8%. And actually, the next thing we're going to get into is how you're told to save for retirement and all the money's going to be there when you need it. And part of what they do is they bake 6 to 8% gains in whatever money they're investing. They bake it into the value of whether or not they're going to be able to make the payments they're supposed to make to help you as an older person with no income and you have to eat and pay your rent. But what a lot of these pensions, and I'm talking about municipal pensions, statewide pensions, even some of the big ones nationwide, they are baking in ongoing gains in the stock market. So what happens when the stock market starts going down? They actually lose value of their holdings. Can they make the same payments? That's why you see the contribution amounts rising, the payment levels reducing. You're seeing a lot of pensions who are offering fewer services. It's kind of like phantom inflation. The way that they're taking out little parts of the pensions, you're not noticing it as much, but they're giving you less and asking you to give more because there's not enough money there. And it's only going to get worse if the stock market doesn't go up 6 to 8% per year. You have been told that real estate always goes up. And even now, there are pockets of real estate that are declining. Overall, I wouldn't say that real estate prices are coming down. And there's also a lot of factors that could actually drive prices much higher, such as lowered building due to the tariffs because of the higher prices. And people are sticking with their homes more often, yada, yada. The point is, there are pockets where real estate in a big area is declining pretty rapidly. Just overall, it hasn't totally broken as I expected, obviously. I've been talking about this for a while. Real estate prices are not sustainable. The point is, though, you can override sustainability sometimes, such as what could happen if there's suddenly no houses for sale, no houses being built. Yeah, the prices will go up. Should they? I don't think so. But as the American dollar declines, that actually makes it seem like house prices are rising, even though you have the same amount of value in the thing you're buying, like a loaf of bread. You just pay more dollars for that loaf of bread. But people are told real estate always goes up, so they invest in real estate and then they act like real estate always goes up. You don't want to be in the condo market right now. You've also been told that we're not in a recession. While the economy is recessing and it actually dropped about 2.5% in terms of GDP into negative territory last read. And a lot of these numbers are manipulated anyway, so you can't really trust them because it's another part of the bluff. But as I said in a video a while back, we were in a rolling recession for a while. So different parts of the economy went through a recession at different times. That took a lot of the heat off, a lot of the pressure off, but we're still due for one big deleveraging, which will look like a recession, where all of a sudden people are cutting back on the debt levels they have, and banks are not allowing people to have the debt levels they have. You're even seeing now with mortgage originations, there's just a lot more strict regulations to even be able to get the money lent to you. When the lending system locks up, when the banking system locks up, that's when you're really going to start to feel some of the major pains in the economy. You're told that we have the petrodollar, and we signed that agreement ages ago. It's pretty much done, and they can do whatever they want now. Saudi Arabia decides what they're going to sell their oil in, what currency. We've had the petrodollar, but it's not a guaranteed thing like it used to be, and it's not an accepted thing like it used to be, especially at a time when they're trying to de-dollarize. Everyone's trying to de-dollarize. This is part of it. You've got China buying oil from Saudi Arabia. They're not using US dollars. And like I always say, they're cousins, not siblings, the reserve currency and the petrodollar. If you have the petrodollar, you're almost certainly going to be the reserve currency because so much oil is traded in dollars, so there's so much use of US dollars. And it is the leading currency, so everybody buys it as the safest haven, or the least dirty pair of socks, I suppose. Both, they even told, and was true, the reserve currency and the petrodollar are waning faster than they ever have. And it's actually demonstrated in what I told you probably about a year or 2 years ago. Who knows how long it was. I told you it will emerge or represent itself, it will be illustrated by the price of gold. As the price of gold goes higher, that's a reflection. Price of gold doesn't go higher. Price of gold stays there. It looks like it's going higher because more dollars are required to be brought to bear to buy that same amount of that asset, gold, which never changes value, has never changed value, and always has value worldwide among every single country with or without the power on. You've been told so many times that the BRICS currency is not possible. They're already using the unit, a currency backed by gold, for big nation-state transactions. Saudi Arabia wants to deal with Iran, wants to deal with China, wants to deal with Russia. We've got the unit backed by gold, which is how they're doing a lot of trade right now already. There's some de-dollarization. If they're not using US dollars, they don't need as many US dollars. So if they have US dollars, they'll let those get released into the wild. They'll exchange them, they'll spend them. And if they don't need as many US dollars, they don't buy any more US dollars. The world is shifting right now. I don't know if you guys can see it. It will be manifested all through the price of gold. But it's telling you a story that I'm explaining to you what's really going on, because people are looking at things like, say, oh, I don't know, gold, and saying, oh my gosh, the price went up because there was so much central bank buying. That was the story from the 80s, 90s. 2010s it really started picking up, really got noticed from our end. But you were told the BRICS currency could never supplant the US dollar, it could never become a competitor or an alternative currency. It already is. There's what, 50% of the world is going to be using the BRICS whenever they launch it, if they do. If you're in Indonesia and you go to a store to buy something, you will be able to use the BRICS currency instead of the US dollar, which means you will use the BRICS currency. You've always been told work hard, that's the way to get successful. And I actually destroyed that argument in my Upthinking book. And I know there's a lot of new people here, I don't want to talk about it too much, but if you want the Upthinking book, it's available only through peterleeds.com website. The other books are available wherever, but the Upthinking book only through my website, and I pay the shipping anywhere in the world, which I regret having committed to back in the day, because the shipping rates are absolutely insane, sometimes more than the value of the book itself. But the point is, there's no direct correlation between hard work and high success. You actually probably know a few people who almost look like they fumbled into success, or they stepped into it and just happened to be in the right place at the right time, and all of a sudden they're set for life. Was that hard work, or was it happenstance? Hard work does not directly correlate to success. That's why you have to think about, don't work hard, work smart instead, which is exactly what I explained in the Upthinking book. Overall, this whole time you've been being bluffed, which is bittersweet. I'll tell you why. It's bitter because you were lied to. It's sweet because now you're emerging from that. You're getting out of the matrix. The point of this channel is to set you free. I show you the economic reality. I give you my interpretation of it. You do what you want with that. I'm getting lots of great comments about how people are doing with me, which is also why you want to subscribe to the channel so you can help yourself and allow me to help you. I'll try to help you. I really will. I've told you many times in these videos what to get involved with, what to avoid. And I've been right on about this whole gold trade and telling you it was coming and seeing it coming and how to get positioned and what to avoid and to get out of Magnificent 7, etc. And literally all you had to do was watch a video for free and actually believe what I'm telling you. You can believe some guy on a video in a closet, or believe somebody with credentials, published books, media interviews, a track record, a reputation. If you want to have me at your beck and call by email all the time, plus get a special newsletter, consider becoming a Peter Leeds Insider. It costs you $3 a month.